Hello, everyone. How we doing? Had a lot of time off now with this big weekend, and now bank holiday starting the week. So I have to get back into it. You guys know the feeling, feeling a little groggy from the weekend, but hope you're all doing well and you are all ready for this new trading week we got. Sorry about that, guys. My weekend was great. It was filled with grinding and grinding and grinding, as you guys have probably seen now, or if not, you can refer to the most recent announcement or any of my recent Twitter posts. We've been concentrating a lot on the Rice Statistics app now, and it's officially ready to go publicly, right? To launch to the public. So this Friday, we're launching the app. I am in some final preparations, so it is a hardcore week for me. And yes, my trading will take a step back this week. So I will refer you guys to the plan I would have done if I had a lot of time, but I'm gonna adjust my trading hours because of this specific week and these specific conditions. But we'll go over all that in detail. Just wanted to let you guys know in advance, but it will not affect our live events. I will be here for PA reviews, which this week we only have on Thursday. As you can see, I have showcased here the orange folder news, right? What Forex Factory calls medium impact news. And this is not a sign of a change to the future. It is just for this week specifically with a fake bank holiday because yes, apparently from research, the markets will be open today, even though it is a bank holiday. I'm saying today, but technically tomorrow, right? I'm EST, so on Monday. And because of that, and due to the fact that we only have one high impact um, news day, right? A high probability trading day this week, which is Thursday, I do want to look at orange folder news for the following day to align with price, more specifically 8:30, meaning that I will look for an 8:30 Judas swing rather than a 9:30 Judas swing. With a week like this, I'm not going to be trading early on in the week. I might be looking at the charts and hence trading, but I'm not going to be looking for a trade. What that means is unless I have a perfect A plus setup, I'm not even going to take a trade. And if there is an A plus setup, I'm going to be half risk. So I'm going to be in front of my charts, perhaps tomorrow, but for sure on Tuesday and Wednesday. But I'm not going to expect the weekly expansion to start up until Thursday. The problem with that is that if we look at price now and we forget about these news for a second, what you'll notice is that we've been stuck in a range, right? We've just been consolidating Thursday and Friday, which means that if we follow the cycles, price is now ready to expand. Due to that, I'm going to expect an early week expansion followed by consolidation into our Thursday high impact news, which then would create our weekly expansion. Just another way of saying the real week's move, the weekly distribution. If we concentrate on price, what do we see? Well, last week we went up, right? If we refer specifically to last week, we had a classic buy week, low of the week forming on Tuesday, expanding all the way into Thursday, Friday retracement. A classic perfect buy week. But we still have a bunch of divergence on the highs, right? There's still all of this SMT above. There's also short-term SMT now. There is a lot of divergence between ES and NASDAQ. You can see this very easily if you just look at this candle right here. Friday was a retracement lower for NASDAQ down close, while for ES it was a very big expansion higher with a quite aggressive up close through previous day high and current high of week, right? With the high of the week, of course, forming on Friday. So I'm not finding a better word for it, so I'm gonna say it like that. A shit ton of divergence. Current monthly highs are not clean at all, not protected. So even though I want to frame some downside ideas, right, some shorts to go target these lows that we left, even though there's some shorter term SMT here, which you can spot from the candle differences, there is still low resistance liquidity here. And as we talked about a few weeks ago, I believe it was last week, we have some equal lows, equal lows. We are forming failure swings. These are signs that, well, these are high probability liquidity pools, right? We don't have to go actually further than that. This is consolidation with equal levels below it. This will be referred to for an objective. But do we have to go now? No. not whatsoever. So it's going to be another week of reacting to price with some predefined ideas. Now, what do I mean by that? Well, same thing. I'm not going to start calling highs, because if I try and start calling highs, this is where you get attacked, right? You keep, oh, I'm trying to short every single high, and I end up with a max losing day. That's not what I'm trying to do. But I do want to frame some downside ideas, and I'm going to be long until the criterias for these downside ideas arise, and then the targets are very clear. Previous week's low, which is the start of this area, of course, current monthly low. These are definitely some big targets, and this is talking long term, by the way, guys. So I'm not saying that this week will go all the way down here, but I do want to frame some short ideas as soon as these very specific criteria happens, which is a rate of important liquidity. So for example, this is previous month's high. That is pretty important liquidity for me. There's also previous week's high. So if we start the week by going higher, taking out these levels, and then there is SMT present in this area, we are within a higher time frame in efficiency. If we look at the weekly fair value gap, you can also look at the daily. I just refer to this one specifically because this is the one I've been referring to for months. But this is the specific idea. From this point, if we, oh, not the 1 minute, sorry guys. If we do take out these levels, form SMT, and of course there's always going to be the higher time frame SMT, but I'm talking about a lower time frame. I'm going to be looking specifically at the 4-hour and the 1-hour, my intra-week and my midterm higher time frame. I'm going to be referring to these time frames to form SMT at these levels. So with the fact that, of course, there's already SMT at these highs, right? I want to see some local SMT, meaning some short-term SMT formed after taking this high. Then I can start framing some downside ideas. And of course, if we look at the current range that we would form from this move, right? So imagining, well, anticipating that we take out this high, well, actually, I don't want to change my template. So let me just do this correctly. So if we take out this high, this is the range that we'll be referring to, our most recent expansion range. And I'll be utilizing this discount order block to be my low-hanging fruit objective. So if we start going lower from this point on, this will be my objective for retracement. And if we see the same structure again, then I can start framing some long ideas from this level to continue to the upside if we show bullish prices, bullish order flow. So sadly, another week just like this where price is unclear in my book and we have to adjust to it. But last week, like we said, I wanted to frame downside, but we could keep going up. So what did we see? Well, Monday downside, Tuesday formed some key structure, right? We had SMT with a very important level, right? All of this is nothing new. Then we had a weekly expansion higher, some frame short ideas. It is all about reacting to what price gives us. And for me, that is all about profiling. So if I see some important structure form at key areas in price, like above previous month's high, above previous week's high, then these are places where I would consider myself in a deep premium and look for shorts. And whether that idea is on side with the weekly expansion or not, I can still frame retracement opportunities. Why not use the current 50%, the most little? What do you mean the current 50% and the most little? If you give me specifics, perhaps an image, do you mean by premium and discount when you say 50%? Like the equilibrium of the range? Just to make sure I understand correctly. Do you mean like, oh, why not anticipate that it could retrace just to a discount and then continue higher? Smaller swing point to another swing point. Do you mean here? The smaller swing point. Yes. Okay. So I am anticipating that it will create a range here. That is the only reason why I'm drawing my premium and discount like that. It's because the idea that I am framing is that we will trade above these highs, and this at that point in time, I will be referring to this range because we will form a swing high at this point. So that's why I'm drawing this range. It is in anticipation. If I would be looking at the current range, right? If you guys want a little more insight, right? Something that usually only comes to students, my higher time frame analysis is very simple. Currently, we are trading within a bearish range. All right, so let me remove all the drawings and get a little more in depth. We are trading within a bearish range. Of course, there's SMT at the highs, but this is just because NASDAQ is a little slow right now. So through my personal experience, as I said last week, I forget about this one. I do not look at it. But what do I see? I see my first premium in efficiency. Why do I look at the premium in efficiency? Because I'm in a bearish range. That is currently a bearish order block. But that bearish order block got traded into, respected on Monday, which framed my Monday shorts. But then on Tuesday, we traded back into it. This is showing me that we are not respecting this level. And if the first in efficiency and premium does not offer fair value, means it does not rebalance and then go on to target external range liquidity, right? Which would be the external of this range. Oh, I wrote lower time frame external, have different little templates for each. So which is also currently the current low of month. If we don't respect this first premium and efficiency and head towards this liquidity, then it tells me that I have a higher objective. And what is that higher objective? Well, it is specifically the external on the highs. So from disrespecting this inefficiency, it has told me that now my objective is higher. So I'm framing any single trades that I will be taking, and I'm not going to be trading specifically tomorrow. I don't want to say I won't, because I will be in front of my charts and I might consider an A+ setup expansion, specifically since, as I said, we've been consolidating for 2 days on a daily time frame, right? Even though these are multiple 100 handle moves, right? 200 handles, 180 handles or so. But I will be considering longs to this objective, and as my previous drawings showcased it, if I just bring them back real quick, then I'm framing this idea to go short, sorry. And short until where? Well, until my first discount in efficiency. And if we trade deep into this first discount in efficiency and show a lack of respect. Now, how will I see this? Well, disrespecting important levels. So I'm going to have my mean threshold. And if we start expanding through mean threshold, then that for me is very bearish. And now I can finally start looking for shorts, right? We are just building up liquidity to the downside. And so we're going to keep going up until we have a specific shift in midterm or long-term structure, and those shifts always form the exact same way. You need an important level of liquidity, you need SMT, and you need a lower time frame entry model, which specifically for me, I have specific things that need to align for me to consider a trade. But for the idea, I needed to sweep specific liquidity with SMT, and of course based on time, which looking at a daily time frame is all based on news. So I'm gonna frame my ideas like this, and if we start the week going lower, then I'm gonna look for longs going into Thursday to again go complete this higher objective above. Does that make a little more sense now? Hopefully it does. I see a lot of new faces in here today, by the way. Faces I don't see often. Just wanted to welcome you guys. Very glad to have you with us. I don't know if you came for the Rice Statistics app or specifically through Rice Trading. I tend to not do marketing for Rice Trading, trying to keep it a tight-knit community, but welcome. Just wanted to take a second here. And also, I did speak of price action reviews, which basically we review the price action and the setups it gave, specifically the Rise model setups, which you can find on my YouTube if you're interested in my model, for that specific day. And we only do them based on high impact news days, which are high probability trading days, which you can also find in the projects tab if you go over in the Rice category in the Discord to the projects tab, you'll see Rice trading model, and you'll find a complete thread of how I use news to find high probability trading days. So a lot of information there, but definitely you guys can start there, and any price action reviews are hosted live in the Discord and then recorded and put on YouTube, just as this Outlook will be. So you are welcome to look at YouTube or to join any of the live events which will be headed. with the bank holiday, but like you said, there is an A plus. I'll roll with it. Yeah, so a little bit of a tricky day right there, right? So these are the type of days where if it does something nice, I want to be a part of it. But if it does something not nice, it was kind of to be expected, right? Because to me, it's a 50-50 day. So I don't want to get hit hard. So I'll just go on my charts. I'll look for the best setup possible. If it doesn't come, I'll be happy because I was in front of my charts. I was there for an opportunity, but a setup didn't come. And I'll also be playing half risk so that if a setup comes, but it just ends up being high resistance with deep retracements that stop me out, then I won't be mad because I gave myself the opportunity, but I did not get hit bad. So very simple way. And of course, this is not the best way to maximize result. If I wanted to maximize results, I would trade every single day and be full risk, always the same risk all the time. But that's not how I like to do things. I like to be conservative. My best trading quality, if I can say, is my consistency, and I want to keep that very high. Very high, sorry guys. You trade days with no high impact news but de-risk. Sometimes I do in very specific conditions. The best example of this was last week. So I'm not going to repeat myself, but if you want to go look at last week's outlook, it's available on my YouTube, right, in official links. And I went in depth about when specifically do I trade not high days with no high impact news events and how do I engage with them specifically. So definitely went in depth there. What's up, Nine? Nice of you to do a little to come say hi, right? We are just finishing up though, so I do want to give you guys a chance to ask any more questions if you do. I guess I had time to answer them all. Gonna give you guys a sec to type here. What's the app all about? All right, well, I'm going to call it a day for the recording just because, as I said, this is all being recorded to YouTube, but we can stay in here and talk a little bit more about the app.